Today, we will talk about earnings yield, definition, example, and how to calculate it. The earnings yield is calculated by dividing the earnings per share for the past 12 months by the current market price per share. It shows the percentage of a company's earnings per share. Investment managers and investors use earnings yield to determine whether assets are underpriced or overpriced. Money managers compare the earnings yield of a broad market index, such as the S&P 500, to interest rates, like the 10-year Treasury yield. If the earnings yield is lower than the Treasury yield, stocks may be considered overvalued. If it's higher, they may be undervalued. Investors should demand a risk premium in their earnings yield to compensate for the higher risk of owning stocks over bonds. Earnings yield isn't as widely used as the P/E ratio, but the two metrics provide the same information in different ways. While the P/E ratio may be more popular, the earnings yield can be helpful when there's concern about investment returns. Earnings yield directly shows how much an investment may earn for investors, whereas the P/E ratio can affect the earnings yield. The inverse relationship between earnings yield and the P/E ratio indicates that the more valuable an investment, the lower the earnings yield, and the less valuable an investment, the higher the earnings yield. In April 2019, Meta was trading near $175, with 12-month earnings of $7.57, producing an earnings yield of 4.3%. The stock increased by more than 70% between 2016 and 2017, with the earnings yield rising from approximately 1% to 2.5%. The stock fell more than 40% off its 2018 high, while the earnings yield was near its highest historical level, about 3%. A high earnings yield didn't prevent the stock from seeing significant decline in 2018. Here are two key takeaways. 1. Earnings yield is a percentage calculated by dividing earnings per share by the current market price per share. 2. Earnings yield can be used to indicate an overvalued or undervalued stock and is a key consideration for investors when assessing a company's growth prospects. Hope this would help. Thanks for watching.